Okay, welcome guys to this segment of the Module 8 price ladder data point trading. I did get a little bit ahead of myself in the last video. So what I'm going to go through now is actually probably one of the most important things in understanding the fundamentals behind a market move according to the data point. You need to understand what's priced into the market. What we're going to look at in this specific segment is will the figure fundamentally change the outlook of the market. And in doing so, we can understand what the market's actually looking at and what it's kind of expecting. So the first and foremost thing, and I think it's probably one of the obvious ones, is looking at market expectations. So you need to look at market expectations / pricing. So we know what's the market pricing in. Effectively, if we're going into a figure, for example, we keep mentioning non-farm payrolls. So for example, non-farm payrolls, let's say the market's expecting 250,000. You need to understand what is a big beat, what is a big miss. A good way to do this is if you take all the market expectations, because if you're looking, let's say, on Reuters or Bloomberg, you can start analyzing all the data points from all the market analysts. So all these analysts are submitting their estimates for this number, and they basically give you the mean or the mode for that. And they also give you a standard deviation. So they'll tell you one standard deviation away, one standard deviation is 20K. So I know that a standard deviation move higher is 270K, and a standard deviation lower is 230K. So I'll be trading something above 270K differently than something that's within this range, and I'll definitely be trading it differently if it comes below 230,000, for example. So understanding the market expectations is very, very important, and that's one way to look at it. Taking a look at where the market's price and looking at this one or two standard deviations away, because if we get a 2 standard deviation move, that's where you start saying, wow, that's a really big beat, really big beat, or really big miss. And that's something that probably a lot of the algorithms are plugged into as well. So keep an eye on these things, because they're very, very crucial in trading these sort of setups. And in doing so, you need to also start understanding, which comes to the next bit, if we actually do if we get a big beat or miss, will the market seek new value? So is it a case, if we do get a big beat or miss, is it a figure that's actually going to drive the market to seek new value away from its equilibrium that we're currently trading at? And in doing so, you need to start understanding, at least in the current market context, what the central banks are looking at. So then, the second part of that, which is very important, is essentially what are the central banks looking at? So a good example of this, I'd say, is about a year ago, we had the initial concerns of inflation or disinflation come into play within Europe. So if we looked at, for example, the ECB as an example, so the ECB, they were basically looking at inflation. And we knew they were looking at inflation because they mentioned it. So we had an idea that they were kind of vigilant towards the market, the inflation in the Eurozone was moving lower. And also the inflation expectations were moving lower. So in that perspective, the ECB basically were telling us to look at inflation. So if we knew that the ECB was looking at inflation, and that we should be looking at inflation, the next inflation print, the next European CPI is extremely important. And it's sometimes just as simple as that. Understanding what the central banks are looking at and seeing what's important to them. What's going to change their outlook? Is it going to change their monetary policy and drive flows in certain directions? So if you can understand just this very, very simple concept of what they're looking at, listening to what they're saying. For example, what's the ECB's Cure talking about? What's the ECB's Draghi talking about? Is the FOMC's Yellen, Fisher, Williams? What is Dudley talking about? If you can understand what these central bankers are looking at and listen to what they're saying, and if they mention that they're looking at the jobs, or they're looking at inflation, or they're looking at the PMIs, well, then you need to start looking at those. It's just as simple as that, guys. So if you can just build that framework around what's potentially going to move the market more than others, you can stay ahead of the curve. So basically, this exercise is just mainly, well, at least this exercise here, what we talk about central banks, is about staying ahead of the curve. Because the first time this figure comes out, after we know that the ECB is looking at inflation, no one's going to be looking at it except for the people that are prepared, the smart money. You want to be smart money. So if you're researched and you're well prepped, you will be trading the first figure, have the best flow, the best moves, and the cleanest moves, which is the most important bit. After everyone finds out that it's important, and we've already seen 2 CPI prints that have moved the market immensely, well then, that third and fourth and fifth CPI prints are going to be way more choppy, a lot more tension, and way more volatile in the sense that there's not going to be clean moves. So the whole aspect is here, and what I'm trying to get across is basically try and stay ahead of the curve by doing your research, understanding what the market's actually looking at with respect to central banks and the economies, the world economies in general. So yeah, the next video, we're going to actually look at understanding the market structure, which is probably the crux of building your scenarios, and where you're going to actually look to make and push your size on these data point trades. So thank you very much for listening, and stay tuned, guys. Bye-bye.